Welcome in, folks. I hope you're having an absolutely phenomenal day out there. In this video here today, we're going to go over my $2 million plus stock portfolio, the public account. I haven't done this for a while, so I thought it'd be a perfect day to kind of go through this. We're going to go through the full portfolio. We're going to talk about what stocks I'm holding. We're going to talk about what stocks I'm not buying any more shares of and why I'm not buying more shares of those stocks. We're going to talk about what stocks I'm focused on buying that are current positions, and we're going to also speak about what new stocks I'm looking to add to this portfolio overall, okay? So yeah, a lot to get into in this video here today, folks, so I just want to get straight into it. I appreciate y'all joining me. I'll ask in return, smash a like, make sure to subscribe to the channel. I appreciate y'all in a huge way, and I hope you appreciate me doing this video, and that's the way to show your appreciation right there. And let me get a little motivational for everybody out there that doesn't have $1 million plus in your portfolio. You can do this. I promise you can freaking accomplish this. If you put your head down, you got the right strategy, and you put in the effort and the work, you can accomplish $1 million portfolio. Make it, everybody watching this that's not $1 million plus in your portfolio right now, like this should be your minimum goal. Is a minimum of $1 million, but aim for higher than that. Aim for 3 mil, 5 mil, 10 mil. There's no caps in this life, okay? So, aim for as big a numbers as possible, and you can accomplish this, all right? I've seen I know so many people, and I've seen so many people accomplish it that, once you've seen the success, it's like, dude, you can pull this off. Trust me on that, okay? Alrighty, so let's start getting into this, okay? First position up here, the biggest big dog of them all, is Meta stock. Now, in regards to Meta stock, something very exciting here is they just started paying their dividend. So I'm going to be receiving, I think this week, I'm going to get 50 cents for every share of Meta stock I own, which means I'm going to start receiving over $900 a month in dividends from holding Meta shares every 3 months, which is pretty darn exciting because I was kind of thinking about this a little deeper, right? And they just started paying this dividend, so they should up it a ton over the next 5 to 10 years. And I was thinking about this because I have a couple of rental properties, right? Those rental properties, I probably profit off them about $700 a month each, somewhere around there roughly, right? And I was thinking about this Meta dividend, and I'm like, I'm already going to be making $300 plus a month from this Meta dividend. But the thing with Meta is it's all about the appreciation over time, right? And obviously, Meta stock, it has way better appreciation than something like real estate, obviously, right? As a company, it grows their business bigger and bigger. So instead of waiting around for your 3 or 5 or 7%, in real estate, it's like Meta is just a whole different animal. So I was like, that's pretty darn exciting. And it's just like, I can see that eventually it's going to be $500 a month I'm going to be making from this dividend, $700 and so on and so forth. So pretty exciting there. Tesla is the second stock up here of the bunch. Now, let me show you something very important in regards to Tesla. You want to see this? Check this out, okay? So, this is original shares of Tesla I bought in the public account here, at least that I still have, May 3rd, 2019, right? Yeah, talk about long-term investing, right? Holding these stocks for years and years and years, and there's going to be ups and downs. There's going to be all arounds. It's going to be a roller coaster ride. But at the end of the day, I just stay focused on the long term when it comes to this, right? Elf on the shelf, third biggest position up in the portfolio, $185,000 in this stock, 1,000 shares. Here, in regards to Elf on the shelf, those shares I bought February 27th, 2019, right? And so the important thing to remember is, I was talking about, real estate earlier and things like that. Let time do the work for you. You look at these positions, what do they all have in common? Time's had to play out here. We've let time work for us. And that's the biggest advantage for you as either a stock market investor or a real estate investor. Let time do the work for you. So many people are so worried about trying to, get in and out, and I'm going to time it perfectly, and, I'm going to buy at the perfect time, and those sorts of things. Like, that's great if you can, every once in a while get lucky and you get it at the perfect time, right? But most of the time, just let the time do the work for you. You'd be fascinated by just letting time play out, how much that can help you overall. Amazon's the fourth biggest position up here in the portfolio, $184,000 on this one. So far, we're up $71,000, up 63%. And guess what? In regards to Amazon, time's starting to pay off, right? The original shares I have in the public account here, those were acquired April 21st, 2022. And so time's paying off, right? And I've bought Amazon, so many times over the years. And the most recent shares I got was November 17th, 2023. I got those shares there, right? But time is playing out here. So many people get so impatient with stocks. They don't let the time play out. They think, if they hold a stock for 6 months and it doesn't go up and it went down, like, oh my gosh, I'm ruined. I'm horrible at this. And it's like, dude, let time play out. Time is on your side as an investor, which one of the reasons it's, pays to get invested younger, right? PayPal. So PayPal. A lot of people frustrated with PayPal stock, and I'm like, dude, most of these people that own PayPal stock, they haven't even let time play out here, right? In my opinion, time's gonna pay off in regards to PayPal here. The oldest shares I have in the public account for PayPal, those were acquired May 12th, 2023. It hasn't even been a year yet. Every share I have in the public account is all held short term so far. So we haven't even gotten to a year point in time yet, right? So this is a perfect situation of like time, let time play out here, and things should come together, right? The newest shares I bought in regards to PayPal, February 8th, 2024. Time, folks, okay? Listen. Everybody gets so damn impatient nowadays. As an investor, impatience is your enemy. It's your enemy. Patience is your sidekick. Patience is your helper. Patience is there to guide you to where you need to go, okay? It's a long time. Got a long time to let things play out, man. And I understand when I first got in the market, I was a little impatient sometimes because you're new, right? And you're like, you want to start making money and all these things start coming together. Got to let time play out here. And I've been in the market over 15 years, right? Listen to anybody that's been in the stock market a long time or in real estate a long time. We're all going to tell you the same thing. Let time play out because we've all benefited from time, okay? Yeah, it's amazing like how impatient people get, but I understand it. I get it. Palantir's sixth biggest position here. We're up $78,000 on this one, up 159%. Now at this point in time in regards to Palantir, in time is starting to pay off here, right? The oldest shares I have in the public count here, I acquired these 888 shares, $7.69 right there. That was on June 17th, 2022. Time is really starting to pay off in regards to Palantir stock. Seventh biggest position in the portfolio. This is where things start to drop off in terms of sizing. Those are my big six. Palantir, Elf, Meta, Tesla, Amazon, PayPal. Those are the big dogs. The smaller guys are now, right? Revolve, seventh biggest position, $48,000 position, 3,000 shares, $9,800. We're up on this stock so far. We'll speak about that a little bit. Cheesecake Factory, the eighth biggest position in the portfolio. This is one I've been adding pretty aggressively last few months. $47,000 position so far, up $4,200. Cheesecake Factory is a very nice dividend payer as well. It's usually a 3% plus yield. Nike, somewhat newer stock to the portfolio, ninth biggest position here, $34,000, 322 shares in regards to Nike. By the way, I hope you guys know what these companies do. Yeah, it Revolve's a e-commerce company, really focused on clothing, much more in the women's space. Cheesecake Factory, restaurants, Nike, footwear, plus other clothing, athletic-related clothes. Fubo's a 10th biggest position in the portfolio. We'll speak about Fubo in just a moment. 15,000 shares here. Sounds like a crazy amount, but it's only $26,000 worth of shares. That went down 30%. That's a tougher position. Planet's a position I've been in for quite a while. Time has not paid off in regards to this one. It's down 65%. It's been a very tough stock. We'll speak about that in just a moment. That's my 11th biggest position. 12th biggest position is my insurance. I have Chipotle put options here. These ones expire January 2025. And my other insurance is Toll Brothers. Those ones expire January 2025, $75 puts there in regards to Tully Moly. Now, real quick before we get into what stocks I'm planning on buying, selling, holding, why, those sorts of things, let me just say this about the hedges first and foremost, right? Whenever I go to hedge, first off, mentally, it's money I think I'm throwing away. No different than health insurance, car insurance, homeowners insurance, all those sorts of things, right? The idea is you're going to throw your money away likely, and that's fine. But if things go really south, it's there to save your butt, right? That's the way I look at hedges. So whenever I go to do hedges, I'm trying to do them on specific stocks that I know will get likely obliterated if the market gets hit hard, right? Because being so net long, I need to protect myself in case there's major downside in the market, right? So let's say there's a situation where the S&P 500 falls 20, 25% or something like that, right? Big fall. Well, In that sort of situation, stocks that will get absolutely wrecked in that market will be stocks like Chipotle that have a much higher valuation, right? Or stocks like a Toll Brothers that's a home builder. We know like if the market tanks, those cyclical type stocks get hit hard. And so those are the type of stocks. I mean, you can even look at the home builders, even in the 2022 crash. Those companies report, record earnings and phenomenal numbers, and still look at what happened to their stock prices. They all got hit heavily, despite having record earnings during that time. So that's what I'm looking at whenever I go to hedge my portfolios overall, and just a little food for thought there, okay? Now, here's a portfolio in total. Meta makes up 42% of the portfolio. That's not ideal, I understand. It's not what I really want, but the stock's up $658,000. We're up about 300% on that stock, so it is what it is, right? Tesla makes up 15.6% of the portfolio. Elf on a Shelf makes up about 9%. Amazon makes up 8.8%. PayPal's 8.8%. Palantir 6%. And then this is where you get to really small positions. 2% for Revolve and Cake. A little less than 2% for Nike. A little over 1% for Fubo. Planet's a little over 1%. And then my hedges are really small. I do need to add more to my hedges because I need to get this portfolio to at least 1% hedged. I do not like being less than 1% hedged. That's not ideal for me overall. I want to have this portfolio pretty much always at least 1 percentage point hedged, okay? So overall, the thing you got to understand is the safer the stock, the more likely the bigger the position is, right? So these sorts of positions I look at as pretty safe companies. Doesn't mean they won't get hit in a market crash, because all stocks get hit in a market crash, right? But these type of companies can weather many storms, right? And then the more speculative the stock, the smaller it is, right? So you look at like my hedges, super small, Planet, super small, Fubo, super small. But those are those type of opportunities, like they're 10x type opportunities, right? If a Fubo pulls it off, like that's a 10x plus opportunity, right? If Planet pulls it off, it's a 10x plus opportunity. But, there's big question marks with those sorts of companies. So that's something to keep in mind there. Now, what stocks am I looking to buy versus not buy, and why? Well, Meta, I'm not looking to buy Meta. But ask me this question. Is Meta stock a buy right now? The answer is yes, that's a flippin' flapjack and lootly. Meta stock is a buy right now. Meta's probably on its way to 550, 575 here in the short term. Meta's absolutely a buy. With that being said, I'm not buying it. And the reason I'm not buying it, it's already a ridiculously massive overweight position in the portfolio. And I also don't view Meta as the best place to put money at this point in time. I still think it's easy money, but with that being said, it's not the best money. There's other stocks I think are better, more interesting opportunities. And once again, I can't even consider buying that one because it's already over 42% of the portfolio. And keep in mind that 42% could go higher in the short term. I just told you that I think Meta's probably going to 550 to 575 short term, right? Short term is in less than 12 months. So if that happens, guess what? Meta's might be going to 45% of the portfolio, 44% or something like that. Tesla, not looking to buy Tesla. And the reason being is, once again, this is too far overweight as well. It's already 15% plus of the portfolio. Think about it. If Meta goes on another run, to 400, and then they get those numbers start going again, and the margins start going up in the back half of the year, and that starts going on another big run, the weighting of Tesla is going to become much, much bigger overall. So, not really looking to buy any more Tesla right now. Elf on a Shelf, not looking to buy more Elf on a Shelf, and the reason I'm not looking to buy more Elf on a Shelf is I'm just confused. I just don't know. Every time I keep thinking, like, this has to be kind of the top for Elf's numbers, they blow it away, and I'm like, how do they keep doing this? And I'm still at that place with Elf where I'm just like, can they really keep growing this business the way they're growing this business? And I just have doubts, but I shouldn't have doubts, and so it's just a very conflicting situation in regards to Elf. So overall, I can't buy it. But do I want to sell an Elf? No. It would be a horrible decision for me to sell my last 1,000 shares of Elf. I regret every share I ever sold in the stock, and it always outperforms and always does better than I expect. And to sell a stock when they always are doing better and better than you expect, and you have to doubt them because you're just like, this just seems too good to be true, right? It's a pretty good situation. So I can't cash those 1,000 Elf shares. I got to hold those, baby. Amazon, looking to add some more Amazon, yes. I would love to buy some more Amazon shares. I really want to get Amazon to like 10% of the portfolio. That's always kind of been a little bit of a, in the back of my mind, goal in regards to Amazon, and get it to 10% of the portfolio. So, I wouldn't mind buying Amazon. Amazon always is a buy. It's a very simple stock. It's always a buy. It's never not a buy. Same thing with Meta. Meta and Amazon, they're always buys. Someday Amazon might finally not be a buy anymore, and someday Meta might not finally be a buy anymore, but pretty much throughout all of eternity, those are stocks you can buy. PayPal absolutely is still a buy at this point in time. I would love to get that one at 10% of the portfolio overall. So yeah, I'd like to add a little bit more PayPal there. Palantir, no. Why no more Palantir? So no more Palantir because when I look at Palantir, I don't look at them quite in the same sentence as I would in Amazon or Meta or some of those sorts of companies, right? It has a potential to get there over the next 2 to 3 years, but they're not quite there yet. In the 70% commercial growth rate is very exciting, but I want to see that continue to play out, right? I want to see them continue that. Like, I want to make sure that wasn't just some one-off. Like, oh, maybe, it was just some one-off and we're really excited and then it goes away or something, right? So I want to make sure this AIP thing is as big as I think it is. So for right now, it's just a hold for me. Is it a sell? Absolutely not. I can't even consider selling Palantir stock. But with that being said, I can't really buy anymore. It's already 6% plus of the portfolio. I feel pretty good where I'm at, and I really want to see how these numbers come in over this next bit of time. Revolve is also not a buy for me. And it's tough because their business has been in a little bit of a tough place, but I'm just trying to see, is Revolve blaming it on kind of macro, or is there something wrong with the business model? So that's what I'm trying to see right now. They got a phenomenal balance sheet, and the management team's done a heck of a job over the years. So for right now, it's just a hold, kind of just waiting to see what happens in the business model. And if there's something broken in the business model, or it really just was macroeconomic related things that kind of, the inflation that hurt them over the last year or two. Cheesecake Factory absolutely is a buy. Very impressed with their numbers, kind of the trend that's going on there, the way they're running the business, the growth profile for this company. So yes, I'm looking to buy more cheesecake, 100%. Yep, I would love to get that to a 5 to 10% type position sizing in this portfolio. So I could, cake's another one of those. I could add that one for years to go in the future. Nike, another easy buy for me here. I really like Nike. I would love to add more Nike shares. Anything under 120 is kind of buy target for me in regards to Nike. So I'm hoping they don't report some blistering earnings when they report. I think they report in March, if I recall. I think they're going to report their earnings in March. So I'm hoping Nike to, let's just call it mundane numbers, mundane reaction from the stock price, and it's just kind of chilling. That's my hope, because I would like to build Nike a lot bigger. Fubo, yes, that's still a buy. It's a speculative stock. It's a speculative buy. Can I add a ton of Fubo? No. A position like that, maybe take it up to 2%, but that's about it. But yeah, Fubo, I still like Fubo. I understand there's a lot going on with the whole suit. They're going after Disney and Warner Brothers, and we'll see how all that plays out. A lot of people want to know, well, what's the situation in regards to, are they going to have a lot of legal fees? I'm sure they're going to have some level of legal fees, but I also think there's a potential a law firm could be picking up some of it. Maybe they think there's a really strong case for Fubo here, and maybe they're going to want a much bigger percentage of the potential win there than, let's call it Fubo would usually be willing to give if you're going to go all out of pocket for something like that. So I don't know. We'll see how all that plays out. Their earnings comes up here in the next, I think it's coming up next week, if I recall, or sometime very, very soon in regards to Fubo. The Planet, that's a question mark right now. I wouldn't mind buying the Planet and adding some more shares, but that's another one I'm trying to see, like, what is going on there. The Florida business, they've added a lot of complexity to the business the last couple of years. The Florida opportunity really starts to come to fruition this year, but I really want to see, like, is this like a revenue opportunity or is this like a profit opportunity? Because there's a difference, right? And I'm trying to, obviously they're going to be doing business in Florida. They should be putting up nice numbers, but is it helping the bottom line, or is it something that's eating into the bottom line and causing them to lose a bunch of money? That's something I'm trying to judge in regards to the Planet. The CMG put, yeah, looking to add potentially more of that one. And then Toll Brothers puts, looking to potentially add that one. I might not buy the same strike price, but looking to add to some more of those overall, and I need to do that pretty soon here, okay? So now what about some stocks that are stocks I do not hold in here that I'm looking to potentially buy and add to this portfolio overall? I only have 11 long positions, so I need to have more than that for a portfolio this size. Well, there's a couple considerations here. There's a few of them, okay? SoFi Technologies. So SoFi is a stock I'm considering in the portfolio overall. The thing with SoFi is, at the end of the day, it's a bank, okay? I know a lot of people want to call it a lot of different things. It's a freaking online bank, okay? It's a very high growth online bank, but it's an online bank nonetheless. Do I own anything banking related in here? And the answer is no. The closest thing I would own would be PayPal, right? But PayPal, PayPal's much more true fintech, in my opinion, than a SoFi. SoFi is much more of an overall, they still gets grouped in as fintech mainly because it's high growth, but at the end of the day, it's more of a bank than anything. So I could see SoFi being a good fit for this portfolio overall, given that I don't have any position in anything banking related right now. Zoom video communications is a maybe. So Zoom, obviously, we all know of it from, the hype days of 2020, and the stock went to it went to, I don't know, $400 or some ridiculous price, right? $63 here today. The stock's kind of in a bottoming out formation right now. I looked at their numbers. Their numbers are really solid. Their balance sheet's top tier. And at the end of the day, a lot of businesses have to use Zoom for their businesses. They just have to. And it's still the best option out there. And they do have some other businesses that they could start building out that could become big businesses for the company overall. But for now, they got their stable Zoom cash cow. So for Zoom, I like it. I actually like it. Yep. I don't own any of the stock right now, but I wouldn't be opposed to adding it in the portfolio. It's more of a SaaS-related play, right? And do I really have many SaaS-related plays? Amazon could be a little bit of SaaS-related. We can call it, obviously, with AWS, right? Palantir, we could kind of put in that category a little bit. And outside of that, no, nothing else. So I think Zoom could be a nice addition here. And Zoom could be a buyout candidate over time, by the way. Next one up here that's a maybe is Whirlpool. Whirlpool shares are trading near decade lows. Stock's in a horrible place. We know the real estate market's been horrible from the perspective of people actually moving, right? Like, because we went from such low interest rates to such high relative interest rates in a matter of a year, it created a very bad dynamic for the real estate market. I don't think it gets any worse than what we're going through right now in terms of the amount of volume of homes being sold, existing inventory being sold. I think we only go better from here. And so if that is accurate, if that is true, then a company like Whirlpool will thrive on that, because a company like Whirlpool is going to do best when people are moving. And, because when people start moving, new washers, dryers, ovens, refrigerators, things like that are considered, right? And that's a big benefit for a company like Whirlpool. So the moral of the story is, I think the stock's probably in a bottoming out time period right now, and I think it only gets better from here for them, okay? Next one up here that's a maybe is Starbucks. I think Starbucks could be a good addition to the portfolio. Starbucks is a stock that really hasn't done anything for years and years and years. If you look at the stock, it's a good dividend yield, 2% plus yield on this one, probably going to a much bigger yield in the future. P/E ratio is in a very fair area right now. I wouldn't say it's the greatest deal in the world, but it's very fair. They have competition in China. They have competition in the United States, and that is what it is. But with that being said, the company is very, very solid and very, very profitable. So Starbucks is actually very interesting to me, and I think it would be a potential good addition to the portfolio. If I look at the portfolio, the only thing food and drink related I have in this portfolio would be cheesecake, right? Cheesecake. That's it. So, and that's obviously a very different dynamic than a Starbucks, a Cheesecake Factory with Cheesecake Factory, North Italia, Flower Child, all those sorts of concepts. Those are more, people go there to sit down and eat versus a Starbucks you're going through the drive-thru to get your drink, right? So, I don't know. That one's actually very compelling to me. Wynn Resorts is a maybe in this portfolio. I do own Wynn stock in some other portfolios of mine, but I don't own the public count, obviously. I think this one would be a really good addition. When I think about the public count, I'm always thinking in terms of what type of stocks would I feel comfortable owning for years to go in the future? And what type of companies would I feel comfortable adding to those stocks consistently for years to go in the future? And I see it and I'm like, it's a deal. I got to add more shares of that. And a Wynn Resorts would definitely fit that criteria. They've also brought back the dividend at this point in time. I think they'll likely up that dividend quite a bit over the coming years. And yeah, man, I mean, they just are the creme de la creme in Vegas, the creme de la creme in Macau. They've got other opportunities. They've got a property under construction right now in the UAE. They obviously operate the property in right outside Boston, Massachusetts. And so, man, and then there's talk They also own the piece of land right across from the Wynn and Encore here in Vegas. They also are in talks of a potential property in New York City, in Manhattan. I don't know, man. We'll see. But I really like Wynn a lot. Anything under 200, is always appealing to me. Anything under 100 is like steal deal. So that's kind of my thought process in regards to Wynn. Google McDougal's a maybe here. So Google's actually looking pretty appetizing. The forward P on the stock's very attractive. I believe the forward P right now is around 20 or under 20 on Google. Obviously, we know them from YouTube, which you're watching this on, or maybe you're watching this on X. You could be. I post on X as well. We obviously know them from, by the way, if you're watching this on X, let me know in the comment section if you're watching this on X or if you're watching this on YouTube. But in terms of Google McDougal, YouTube, Google search, two extremely solid businesses, right? And obviously, we know about the great balance sheet. Everybody's kind of cast them away in terms of the generative AI opportunity and AI in general. I just don't think that's probably the right move to make. Google's been doing AI as long as anybody. People just have never realized it. Like when you go to search something, what do you think's going on there? Like, well, why does it have always such relevant results? Like, think about this for a moment, right? How does YouTube know people so well and feed them videos that they know they'll be interested in? So this is just some food for thought in regards to that one. So Google McDougal's actually looking somewhat appetizing. Now, in regards to public count over time, I think one of the reasons that the portfolio has had a lot of success outside of hard work and sticking to strategies and those sorts of things, right, is a huge part of the success is just always focused on the long term with this portfolio. Never trying to this stock might report an next good quarter, so let me buy it now and I'll sell it after the quarter, something like that. Because those sorts of things, can be the detriment of your portfolio. And so the reason I think it's had such great performance over the past 5 years, if you compare it versus S&P or the NASDAQ, and obviously a great last year as well, I think it's really a lot of it comes down to long-term focus. Having the right strategy is phenomenal. Putting in the work is phenomenal, but also staying focused on the long term and not getting caught up in the short term stuff. There's a lot of stuff that's, I could go through all those stocks I own. They've all had to deal with a lot of crap in the short term over time. Amazon had to deal with it. Meta had to deal with it. Tesla's had to deal with it. Palantir had to deal with it. Elves had to deal with it. And at the end of the day, the results speak for themselves. Okay. So if you're looking to build up your portfolio over the coming years, you want to learn everything I got up here, apply to join my private group. That's going to be the pinned comment down there. And, that gets into all my courses, exactly how I find stocks, how I find if a stock's undervalued, overvalued, if I'm getting a great deal, the opportunity in a stock. That goes through all those different course curriculums. And you also get access to my Discord chat as well, which is filled with people with 6 figures, 7 figures, 8 figures in their portfolio. So pin comment down there to apply to join us. Much love and have a great day.